right. Well, I've got one clapping here. Tim Abel over here, local Philadelphia bank, who knows what trust the process means, right? I don't know, show of hands if anyone gets that reference. Yeah, okay. And actually, it's kind of funny because you have to like explain the joke, to mention it, so maybe it's not that funny. But trust the process is the 76ers over the last 10 years, and the metaphor is, how they dealt with talent and how we're dealing with talent, how we're dealing with compensation. They drafted Joel Embiid. He was on the sidelines for 2 years. They drafted Ben Simmons. He missed his rookie year, and then he wouldn't shoot the ball. And then they drafted Markelle Fultz, and he forgot how to shoot the ball. So these are literally things that happen. Community banks are in a similar season. You're competing with big banks. We've been talking about it all day, and tech for scarce talent. Cash helps, but championships are won by process, right? Role design, compensation, succession, benefits aligned with real impact. So that was a long-winded kind of like way to bring it all together, right? I'll let you guys introduce yourselves, starting with Mike Downey over here.
Sure, Mike Downey with Alden Investment Group. I apologize for the glare with the light coming off my bald head if I'm blinding you, but no, I'm a director of insurance with Alden and based outside of Annapolis, Maryland.
And I'm Jeff Fairchild. I'm with Blanchard Consulting Group. We are a compensation consulting firm, kind of headquartered all over. Work with community banks, that's our focus, and compensation is our focus.
I'm Jessica Jones. I'm with Emprise Bank, a Wichita-based community bank. I've been running the people and culture group there for about a year and a half. I've been in people and culture since about when they stopped calling it personnel and started calling it HR. So instead of saying the years, I'll just say that's about the time.
Yeah, you're not a CHRO, right? You're
just a people and culture
gal.
Yeah.
There we go. Well, I appreciate it. Thank you all for being here. You each have a very distinct perspective, and I can't wait to kind of dig into that. Jeff, we'll start with you, because I said something on our prep call, and I was trying to kind of like jab you a little bit. Again, I guess a Rocky reference, I don't know. But comp studies, they're not law, right?
They're not what?
They're not law. Like they don't run the show. Tell me about your perspective on
They're not law. The importance of a comp study, whether you're talking C-suite or throughout the organization, is to just go out and find data points and create sort of guardrails around what types of compensation are available in the marketplace at competing banks and at what levels, what's appropriate as a bank grows, depending on their size, their geography. There's a lot of things that go into doing a comp study. That's the science part. The art is the application. And that starts with your comp philosophy. And every comp committee should sit down every year and talk about their comp philosophy, because that helps guide what components of compensation are we going to utilize for our employees, from salary to benefits, because every form of compensation has a purpose.
Yeah. And, we deal with clients in remote geographies. We deal with clients that are very tech forward. And, it's not just one size fits all. I'm this asset size in this geography. This is what I should be paying my people. It's very different.
It is different. And the first answer to the question always is one everybody hates. It depends. It depends on where you're located. It depends on your structure. Are you public? Are you in a metro area? Are you in an urban area? What are you trying to accomplish? And then back to that comp philosophy of what is your philosophy around compensating your employees, which is typically based on culture to a large degree.
Yeah. Anything you want to say about comp studies?
I would just say that the comp studies, again, back to the science part, that tells you what a job should cost. It's all of the other factors around the culture and the target talent that you're looking for, and what kind of roles can they do, and what kind of roles, or what do those roles cost? Because that's really what you're competing with. And today, a lot of the talent that we're competing with, we're no longer competing with just banks. When you're looking for tech talent, data talent, AI talent, those lines are entirely blurred. So for a lot of these jobs, you've got to figure out what is your target talent's options, because that's really who you're competing with.
Yeah, good point. Well, let's talk maybe more about the current state of play. Mike, I was going to ask you a question. What's actually moving the needle for executives today in terms of your world?
Yeah, so what I do with executive benefits, there's different types. What I see primarily in the community banks are these traditional SERPs, which tend to be designed to be more long-term. I think what we heard earlier about going out and building a culture, but getting others from outside the industry, the banking industry, I'm starting to see more interest in, if a bank isn't publicly traded, maybe looking at like phantom stock or other type of incentive-laced, plans that have certain metrics. I would say too, is it's not a one-size-fits-all. So if you're looking at those that you really want to retain, really find out, first of all, what's important to them. It has to have meaning if it's going to have that hook, that retention. So what I mean by that is someone that's in their late 50s would want something a little bit different than someone that's in their 40s that's more faced with maybe putting kids through college one day. So where I really see a change this day is less as far as that long-term retention, but something that's a little bit more personal to them in more the shorter term.
Okay.
Yeah, I'll just add to that. I mean, that's very important. If you're going to compensate somebody, find out and make sure it's something they value. Because if it's not, then you're just wasting a lot of time and dollars thinking you're going to retain this person for a particular period of time when actually it's not what they want and they can go find it somewhere else. So talk to especially when you're talking about a C-suite, which is a small group of people, but those top employees, find out what it is they value before you start just throwing ideas at them or compensation structures.
Jessica, I wanted to ask you, you're kind of living and breathing it at a community bank. Where are banks underusing their people right now?
It's interesting. So I was in food manufacturing, consumer packaged goods before getting into banking. So both very heavily regulated industries. And in those industries, you find in a workforce sometimes a blind compliance. And I think really creating an expectation of learning agility, or how well do you do when you don't know what to do. I think if we talked about more things like that within the banking space, we would unlock creativity and curiosity in a broad swath of our workforce that we probably don't do as well of a job today.
I'm curious, what's a best success story of landing talent at Emprise Bank? Because you're a $2 billion bank in Wichita, right? Mm-hmm. And you're attracting some of the most tech-forward minds at your bank. And Travillian helped, with some of that work. But what is the biggest accomplishment in terms of talent that you've had?
Well,
what did you have to do specifically to land them?
Somebody said it earlier, it's not about asset, it's about attitude. And really being able to tell a quality story of what someone gets to be part of and the work that they get to do. And the people that want to come be part of that and win, like the compensation components can't be wrong, but you can get there a lot of different ways. It's really more about showcasing what they get to be part of. And people that have gone and done cool things want to be able to come and do cool things again and some more, and with a company that's got the agility and the investment to make those things real. So I think it's all about authentic storytelling and making sure that you're selling the art as much as the science of it.
Yeah. Do you guys want to say anything about
Yeah, I mean, not every bank can always compete also with their employees on just strictly dollars. Culture really becomes important. I've seen a lot of executives and lenders and stuff leave an organization just because of the culture. Maybe it was too difficult to do their job. Maybe you're a lender and you could never get loans through, and so they went somewhere where they had a little more latitude of what they could do because that was the culture there. And they had a little more responsibility level handed to them. So it's not always just dollars. It's culture.
Yeah. Well, we heard that quite a bit today.
Yeah.
We did. You know, M&A is something that everyone's talking about. There's already been a ton of deals announced very recently. There's probably going to be a lot more. And there's going to be a lot of bankers on the street, right? Because they're going to either be absorbed or let go or whatever it might be. How are you, advising your clients to be able to win those talents?
You want me to take that?
Go ahead, Mike.
So I think in developing an executive retention plan, it's very key these days with the change in control. Is it a single trigger, double trigger? What does it mean vesting? Is it going to trigger a tax like 280G? And, there's ways to get really creative on how you design a plan. Once again, I'm going to go back to what I typically see, the traditional SERP, where, they got this liability and they're offsetting it with a MEC BOLI policy. But, you can design that differently where you use a non-MEC BOLI. And what does that mean? That means you can access some of that cash value without a penalty, without tax, and be able to design it with that CIC in mind, thinking, okay, 5 years down the road, what does that mean? So really it's kind of looking ahead, knowing that that's, there's a lot of M&A and that's going to continue. How do we design a plan that really addresses that, that 280G potential, or what does that look like, or what does the trigger look like?
Yep. I'd say that's the strategic part of putting together that total compensation package. I mean, you kind of know what components you have out there. Salary obviously gets somebody to take a job most of the time, keeps them there, but incentives, how you structure your incentive compensation, drives them to perform on an annual basis. Then you got your phantom stock, I believe you mentioned earlier, which if you don't have true equity, you typically lean towards phantom stock, which is cash earned now but cash paid later, or that short-term deferral part of it. And then you get into your benefits. So how are we going to employ all these things? And what components we're going to utilize? And then looking outside, back to the comp study question, what are appropriate levels of this compensation based? A lot of times at the C-suite it's going to be on size, but geography and the culture that we have in place.
So I was going to mention, from my perspective at Travillian as a recruiter, we've noticed over the last 2 years, the CFO position has been consistently one that we're most busy on. I think even at last year's conference I mentioned, we worked on double digits, and it's continued over the last year. We've continued to do CFO search. What are you seeing out there at Emprise and with your clients as the, maybe hardest or most needed roles out there?
I would say, again, it's those roles that require capabilities that aren't specific to banking. So those that we are competing with software and healthcare, anything that requires, data, AI, technology, that talent base doesn't necessarily have to stick to banking. And so I think you've got to be really creative and agile in figuring out how you're going to attract that talent.
Well, how do you do it though? Like, I'm kind of curious, like, is it cash? What is going to get someone to leave Google and go to Emprise?
Well, it depends on what your employee value proposition is. For some organizations, it is cash. For other organizations, it's really about the total workforce experience that somebody's going to have. And you get a lot of these people that have some really cool experiences that have spent many years sacrificing and missing time with their kids and doing all of the, hard work and the sweat equity that can do that and can add value to an organization without having to be the road warrior, without having, right? And so it's just deciding as an organization who you're going to be and how you're going to attract that talent. For some, it might be money. And for others, it's going to be something entirely different.
Yeah. Jeff, you were going to...
Yeah, I mean, I agree with you. I've seen a lot of, I don't do recruiting, but I've seen a lot of CFO positions needing benchmarking over the last few years and some creative structures around how we can compensate an incoming, because if they've been there a long time, the expectation is going to be a lot different than what they were accustomed to. And that happens anytime. If you even have a 40-year tenured CEO and all of a sudden they need a new one, and you know this, they go out and they start realizing how much they're going to have to pay to bring in a CEO that's more above what their outgoing CEO was. And then you start causing some compression possibly if they haven't really been strategic in the past about how they're structuring compensation. From a position standpoint, I do see a lot more technology-driven positions coming into banking, or banks going out to try to create that. They've created a position, now they need someone to fill it. The issue is going to be, banking's been pretty structured in compensation from a regulatory standpoint. How much can we do? Because this person is just focused on tech. And it's a different sort of technology than maybe the last chief technology officer. Maybe that's why they left. They didn't have what's needed now with AI and all these different technology components.
I mean, I would think too, COVID changed the ability to remote work. Years ago, we would hear so-and-so is from the area, their family's from the area, we don't have to pay them X. Mm-hmm. That's changed. I know a CFO in the DC area, they work for an institution in California. They just have to go in the office once a quarter. So that really has changed too, as far as how is someone compensated, because they may be in the middle of West Virginia, but they still can work for a larger institution somewhere else. Now, certain roles you can't do that, but certain you can remote, so that definitely has changed the comp.
Well, and Jessica, Emprise, again, Wichita, Kansas, you live in Omaha.
Right.
You have people spread around. I know other banks that are doing embedded banking have employees in 30, 40 states. Mm-hmm. How did you get to that point where you finally felt comfortable, not having to get people to move to your footprint?
Well, it's certainly a process, and I think we're still on that journey, particularly in a bank that has both a community banking footprint and embedded banking. Not all things are created equal, so you've got to be very clear about what it means to be remote and why you choose to do something like that, where the talent availability is, where you choose not to be remote, and where you go. And you've got to be very clear with your employee base in terms of what the business strategy is and how the workforce strategy is driven by that, and that's how we make decisions. So that way, folks may not always agree. They may want, the 3 days this or the remote that, and why do they get to do this and I don't? They may not agree, but as long as people understand, typically you can move along in that journey.
Yeah, that is a tough one. Mike, I wanted to go back to you, just in terms of, I don't know, what benefits or perks or consistently will win top talent from your perspective?
Well, once again, I think it goes back to when talking to the talent, what's important to them. But I think often overlooked, if we look at, once again, I'm going to keep falling back on a traditional SERP, that's taxable income. Mm-hmm. That's not guaranteed. It's subject to the solvency of the bank. Sometimes you can't control future management, what happens. So I'm seeing, the ability to redesign those differently than they have been in the past. In addition to that, adding some other benefits to it, things that are like disability income or long-term care, things of that nature that are a little bit outside the box than just taxable income.
Does Emprise have anything really unique on the benefit plan?
In terms of traditional benefit plans, I don't know that there's anything super, wonky or unique. Yeah. I think what is interesting for our employee population is the fact that we do try to look at all of the segments we have, whether it's the 5 generations, whether it's the remote versus in person, and kind of personify those things to say, are we serving all of these demographics in a way that's valuable to them?
And Jeff, I remember seeing you at a conference and you talked about generations, right? And Jessica just mentioned it, and how different generations want different things. Can you tell us a little bit about that? I thought it was fascinating.
Yeah, every generation has things that are more interesting to them than the previous generation. When it comes to some of the new generation, they want more now than later. So the biggest thing I've seen, if we're talking about benefits, and I don't deal in qualified benefits all the time, but the biggest thing I've seen in a number of clients I've worked with is if they've had that long-term focus for their benefit plans, like say an 8% match on their 401k, the last couple of years, they have really, to try to get more cash dollars down into the younger generation, they've started lowering those down to just your traditional, maybe 4%, 100% match. Because, well, inflation drove a lot of that, but the employee base and that generation, they need the cash and they want the cash. So they're a lot more kind of short-sighted, I would say.
And the one thing that seems to be a conundrum is when you go out and land that big fish and you have to do something unique, and maybe those people wind up making more than existing colleagues. How do you deal with that? How do you normalize or communicate that? Not that everyone knows everyone's comp, but it's going to be kind of clear. Does anyone have any take on that?
Well, I think you've got to have some hard conversations. You and I talked about this once before, and you asked me, "Do you really say that?" Yeah, I do. Jobs cost what they cost, and situations influence that. So there are some jobs that require a certain set of experiences that we pay X for.
Yeah.
And if you want that type of thing, then let's talk about how we get you there, but let's talk about what things actually cost and why they cost that way. And so if you have those kinds of conversations and really put it onto more of a neutral landscape, you can have that conversation.
Yeah, and if you're upgrading talent or having to maybe push someone back down, we've done it in a few of our banks for CFO searches, where we've had to get someone, to kind of, be a little bit more of a strategic CFO, and it puts the person back in their seat. And when that new talent gets there, they realize, okay, I don't possess those qualities, those competencies that person has, and it actually turns into a very good developmental
It can,
potential.
absolutely.
Yeah. Mike, what's the smart way to use deferred comp and SERPs without overwhelming smaller banks?
What do you mean by like overwhelming? Like from an expense standpoint
Yeah.
or capital? Once again, I think it goes back to, when I hear deferred comp, I'm thinking someone's making a lot of money and says, look, I don't want that money now, I'm going to put it into the future. I don't see that in practice, though. I see more of the bank putting money aside for some time in the future. It's not really the employee's money, for that. But I think, once again, it comes down to the design. If we really kind of look at what I do, it's plan design, plan funding, plan admin, and servicing reporting. Historically, the plan funder is designing the plan design to fit the plan funding. It shouldn't be that way. It should be the plan design, what are we trying to do, what plan funding matches that, and then the admin should match the first two. So you can actually design these plans that they're not liabilities to the bank. They can actually be an asset to the bank. It's just because of whoever was doing the plan funding was trying to sell their funding to that particular plan design. So to answer your question, the smaller banks, I mean, we can definitely design something that is not a huge drag on the balance sheet or the income statement. And the reason for that is looking outside the banking community. What are other industries doing? What are S Corps, C Corps, other industries doing? It just seems like in the banking community, they're just following what has always been done. And what has always been done is the firm that sells the funding is determining the plan design.
Jeff,
Yes.
Plan design, that's something I wanted to ask you about as well. How are boards adapting incentive design to fit, the new norm?
Well, I do a lot of incentive work these days with a lot of different banks. And again, it really just depends on the size and the location. But most of the banks I've been working with are trying to get away from discretionary only bonuses, trying to get away from just the Christmas bonus, but especially at the C-suite level. It's putting targets in place for those individuals. telling them, and it doesn't matter which employee you're talking about in a bank, but telling them what percentage of their base salary they could earn if certain targets are hit on an annual basis. Because I mentioned earlier a little bit, every component has a purpose, and an annual incentive plan is to drive specific behavior in a shorter period of time, a year, and then it pays out, so your retention's about a year for that particular component. So working on really defining how executives are going to earn their incentive award, setting targets under each of those, say, metrics that are in a plan, and then your smaller banks sometimes, and some larger banks, if you're public and have equity, then they're probably going to pay out some equity at that level. But if they don't, it's taking a portion of that incentive that's been earned and divvying it up between cash now and cash 3 years from now, let's say, on a cliff vested basis. And so that starts creating that retention. And then when it pays out, if it's a cash-based plan, when it pays out, they have that award that they earned in that year on, say, that day one of year 4, or whenever the payout is. And again, that keeps their focus on more longer-term results than just the end of the year. Because they realize if 50% maybe of my incentive is not going to be paid until day one of year 4. So I have to make decisions now that are going to last through those 3 years. But every year they have to start thinking about that. So it's kind of a rolling thought process to create kind of an ownership mentality on an annual basis.
Yeah. And you're talking about retention, right? Retention is the next point. And, we look at resumes all the time at Travillian, and what constitutes job hopping? Used to be every 5 years. Now it's kind of acceptable to be 2, right? That's still a good, I don't know about acceptable, but what makes a culture strong enough to bring people back? You talked about it before, but I'd like to hear what you think from the clients that do it well and from Emprise.
Well, I heard someone say recently that someone will leave for money, but they come back for culture. And
You've had that situation where people would go out and come back?
Oh, absolutely. Yeah. And I think it's just evidence for why it's so important so frequently to tell your employee value proposition and to make sure that you're spending time on that. If you're curating a very specific and intentional workforce experience and you're spending the investment and the time to do that, you have to tell the story. Because a lot of the things that you talked about in terms of people dropping their 401k matches and some of because they become invisible benefits. They become things that employees just don't think about. And so it's incumbent upon leaders and HR functions to make sure that the story is told, that it's easy to tell, that people really know what is a differentiator about working there. And again, that's going to be different everywhere you go. It's staying true to here's why it's incredible to work here.
Right.
Yeah, I was just going to say it is important to understand your employee base, especially on the benefits side. I have worked with clients before that are in particular areas, and their employee base is, let's say it's a big farming area. Their employee base there, at a certain level anyway, is there for the benefits, the healthcare benefits, and things that the family doesn't have due to being in the farming industry. And so they're there, and the cost of healthcare is more important, what the bank's covering, than another $1 an hour in their salary. And so, in those particular situations, again, you're trying to structure compensation around the needs of your employee base.
Do you want to add anything, Mike, from what you've seen?
Yeah, I would agree with Jeff there. Once again, with what I do, is so custom and tailored and bespoke. You can design it based off of, geographics or something like that. But really, to use a sports analogy, you could have the best all-star players, but if there's no chemistry, we've seen it. That they're not winning. So if you have a team together that has good chemistry and you're headed in the right direction, it makes a heck of a lot of sense to try to retain them the best that you can.
Yeah.
And I've also seen employees leave for money and come back for culture because they just didn't, the grass just wasn't greener. And I've seen some banks say, well, we don't really want you back.
Jeff, I'll stick with you here. What should boards be talking about right now, 2025? Somewhat unprecedented times as it relates to compensation.
Yeah, I think even on an annual basis, the board should be getting ready to start talking about, and they probably are talking about, but meeting specifically about next year's incentive plan, about the challenges that they may be facing. Should they be making structural changes to those incentive plans, be it the metrics that are involved, what are we asking the people to do? Now, hopefully you've got a strategic plan that kind of can lay that out, so you're reviewing the strategic plan to determine also, is it still on course for next year of what we want to accomplish? It may not because of technology or what we think the economy is going to be like. So you need to be having those conversations about if we need to change something, we need to start thinking about what component we may change. Maybe it's just a slight shift, a weighting of a metric, and I'm getting a little technical on how a plan's set up, but those are the conversations that you obviously are going to have salary discussions because that just happens on an annual basis, but you can't forget about or start too late on the incentive discussions because then you get into the next year and you're like, and I've seen it a lot, we haven't set any goals for next year, and now it's almost April. Well, the executives or whoever's in that incentive plan has already lost 4 months or 3 months of knowing what they're going to be measured by, and it's very important for them to understand at the beginning of the year of that performance period what they're going to be measured by so that they can track easily where am I according to plan, because they want to know. That's why discretionary bonuses are really completely discretionary bonuses. I don't really like them because an individual doesn't really know what they need to do other than be there at the end of the year to get payment for that. And they don't know what it is. They don't know how much. So it's better to define all these elements early rather than later.
Mike, how about you? What are you imploring boards to talk about or to focus on?
Even at the board level, we can talk about benefits for them because in certain, banks that I've worked with, the board member themselves don't really need the fee. It's just more taxable income to them. There's actual benefits, deferred, not deferred comp, but certain things we can do at the board level that still compensates them, but does it in a different manner than other than just receiving taxable income. But I'd also stress too, just reviewing existing plans that might be in place. Do they need to be modernized? Do they need to be tweaked? Are they up to par with, the compensation percentiles and so forth? So I would just, suggest looking at, if certain board members don't need that income, why are we triggering, taxable income that they don't need?
And I would agree with Mike. I was going to disagree with you, but you do need to pay directors for their time and expertise. That's the whole point. I thought you were going down a road of they don't need the money, we're not going to pay them. But yeah, you're paying.
Just compensate them a different way.
Exactly. I don't see as much. I do see deferred comp in director packages. A lot of it's cash. A lot of it could be structures where they can defer their comp. They're given a choice what they want to do with it. But there's all the different little components of how boards are compensated. They're making the decision pretty much how much and how. They need to be thinking about that. Maybe we do want to look at a deferred comp structure because the members aren't there, for a living, and so it's something important they should talk about as well instead of just cash constantly.
Right. What's the dialogue at Emprise, because they're closely held? What's the talk for 2026 when it comes to talent strategy, compensation strategy?
Well, I would tell you we start with business strategy first, and we look at kind of where the puck is going and not where we're at now. So what is it? Every year is kind of like a draft, right? What are we going to need to build and hire today to be ready for what's coming 36 months from now based on what's on that strategic plan. Some of those things we know we won't be able to build internally in the time frame in which we need it. So those are where we are being very intentional in partnerships with organizations such as yours. But we get really then focused on how do we get the experiences? How do we run some plays with folks so that they get to practice on some things before we really need them ready? Yeah. And those are the things that we're having conversations about.
You know, we've had an influx of calls at Travillian for people looking for production talent, lenders, but actually deposit generation. Just, you know, in the month of September alone, we had several banks call us asking to find teams that, you know, could generate deposits for them. What are you noticing? Emprise has a tech forward, embedded strategy, but also there's a very traditional bank at its core. What are you seeing for production talent, the war for that talent? What are banks doing? Are they doing anything unique or you know, I've heard stories about, you know, $1 million for teams coming over from Pinnacle and down in Tennessee and whatnot. Like, the war is real. But how, you know, go ahead, Mike.
Yeah, I was going to say, once again, falling back on the traditional SERP, by definition, it's a top hat plan that's really only for the highly compensated. But what about those that are, let's say, 1099 or don't fall under that? Like, let's say maybe like a superstar lender. There's definitely stuff on the executive benefit side that we can do that is not the traditional, but more the modern design that can be part of that incentive plan for them. And once again, I'm just looking out there and saying, wow, I can't believe that the other provider hasn't done this. But there's definitely stuff you can do that falls below that top hat restriction.
And I've definitely seen those strategies used to bring in lenders, along with, as I mentioned earlier, a heavier emphasis on trying to defer some of that incentive plan to make them think when they get approached. So it creates that retention. So if they built up a decent amount of money in that incentive pool that they haven't been paid, at least they know what they're walking away from, and then they have to determine, is it really worth it to do so? And then, you know, with what Mike said about the non-traditional benefit side of it, that can be another strategy used as well in concert with all the other pieces you put together.
I think when it comes to lenders, there's an element that people forget about in how easy or how hard is it to get deals done in your environment. And those that are really wanting to get deals done, that are going to drive their compensation, they're going to pick up the phone when they have that day where it was too hard to get a deal done.
Yeah. Well, especially if the bank's bigger and bigger and bigger and local decisions. Well, we're almost out of time. I didn't know if there was anything that you wanted to make sure we heard from you about. But I'll just kind of open it up to the panel here. Anything that you'd like to address the room with?
Go ahead.
Oh, you go ahead.
Oh, well, I was going to say, the biggest thing is, you know, if you don't have in place already at your bank, start looking at a compensation philosophy, because that sets the foundation of all the things that we're talking about on what are we going to provide our employees from a compensation standpoint. And then if you determine if you do have a plan like that, then you start looking at, are we even following the plan? Because maybe we haven't looked at it in 20 years. So, you know, if you don't know, ask the question when you get back. Does the comp committee have a philosophy?
And I would just say start looking at some more modern designs, the innovation, the creativity that can be done and still comply with your regulations. You know, I just see the same old stuff because it's always been done in the past.
I would just add that if you focus as much on the workforce environment that you're creating across the enterprise, you can not be exactly right on all of the comp elements, and you're still going to have retention.
Yeah. Well, it all comes down to process. So let's hope our banks out there are trusting theirs. Thank you so much for your perspective, panel. And appreciate the time. Thank you.
Good to be here.
Thank you.